All right, so I'm going to go over some of my bargain basement or bargain bin blue chip stocks. From This is what I'm investing in. Is for long term holding. It's not all I'm doing, but these are the ones that I'm the most interested in accumulating because we've come into some pretty low ranges. The first one up is 3M. 3M is a huge company, deals with a little bit of everything. It's just one of those big companies that make up pretty much the entire market. As you can see, we've come down quite a bit on 3M. They've had some spin-offs, some split-offs, supply chain issues since 2001. You can see we've had a difficult time correcting off there. New management, a little bit of litigious activities have brought the prices back down to levels last seen in 2012. Now, I think that this is a bit of an overreaction for the most part. Let me go onto a monthly chart. We're going to take a look at this on the very much the long term. And yeah, we've honestly we've come back down to the highs of 2011. It's been over a decade since we've been down in this area. Um, I don't think we're going to see it for long either. Pull up some moving averages. We are under all the monthly moving averages that I track on this, except for the 800, which we probably don't have enough price history for an 800 EMA on the monthly. We can go into the weekly and look at it, but it'll be up here somewhere. So what do we want to see it do? Well, we want to see it hit support in this area, right? It's about time for it to turn around now. If we get a recession and it takes longer, then we could see it come back down to the lows and then into this range. And this would be the range I'd be most interested in accumulating. I'd probably bring that up just pieces at a time, dollar cost average, anything from about 109 to all the way down to about $70. I think under 70, you'd have to see how the market's doing. If the whole market's falling, if everything's coming down, then continue to buy all the way down. You know, maybe if it comes back down to that 2008 recession low, I don't think we're going to get all the way down there under probably around $40. I don't think we're going to hit that. But if the whole market capitulates, everything comes down, this could be a good buy and at those ranges. If everything else is moving up and it's just 3M going down, I'd want to be out. Maybe $68. So we're looking at less than a 50%, probably about a 40% loss. Less than that if you're DCAing. And if you really want to play this range, maybe the market's going to correct a little bit more, and I do. Be really interested in start picking it up right here on this line, like 95. And if it turns around, you'll be picking it up on the way up, unfortunately. So, you can start today if you want. Come on in. Go to a daily chart. You can see on the daily time frame, we are just now starting to get above the ATR, or back below. Well, we've just started moving it up. It's moving back down again. Had another cross. Yeah, we're pinching out. You can see this 200-day moving EMA moving in, and we finally retested it since we didn't even touch it there. The first time we've touched it was a couple weeks ago, since 2021. So we've been trailing under it for quite some time. You see price, has stopped falling nearly as quickly. We're starting to round out, and that's exactly what you want to see in a turnaround, is the decline slow down and round out. And it's taking it some time, but it looks like it might finally be on its way there. I want to see that round out and start to break above these EMAs and back up in. to the range. We have the divergence we want to see. We look on the RSI here. On the weekly, we have definite bullish divergence. Definitely higher lows with lower lows. So we have weekly bullish divergence. Do we have it on the monthly? That'd be huge if we had it on the monthly. Not yet. The monthly is not there. Monthly's still lower and lower. So it's just on the weekly, but that should be enough to get us through. The daily. The daily is moving out of that. You can see we had it here on the daily up until here in the end of June. Got a little bit of a pop. This is where we want to see it come back up and start taking out new highs. Let me take the waves trend off here. And we'll take a look at how we want to see market structure change. We shrink this down. All right. So on the daily, we have our first break. You know, we've got a higher high for a daily. And if we stop in here before we get back down to this low, we'll have a higher low and we'll be breaking market structure. So let's make that color. So now what we want to see, let's get our retrace on. We'll hold in this box, in this range. If this is the turnaround, we want to hold in this range and form a higher high here. Right? That's our new market break, right? We can higher low and then a higher high. Then we've broken market structure and we've started to move up. That's when that curl up can occur. Now we have some resistance at 134 and 158. I think we start to break those. We can definitely look to about $200. Get above this range in here. And to me, I think it's off to the races at that point. From a pattern perspective, you go back to the monthly, tighten this up a little bit. Just clean it off a little. And we'll pull out our, there it is, staring me in the face. All right, let's start from here. Here. Uh, 786, a little steep. Right on support, it'd be about an 886 retrace. That I'd be pretty happy with. Or let's pick a better low. Let's see what we look like there. 786 retrace. That's not quite 618, but I'd say that's close enough. That turns us into a nice Gartley. So we come back into this range on this low. This is really where I want to see support. Even if it hits it, comes back lower, I'd be happy if we get a reaction right off of here. I would hope we get a reaction right off of here, about 95.56. So that gives us a little bit of pattern, bullish pattern support, and then you guys can see on the monthly, long term, prone to a few hiccups, but should continue up. I would expect this over the course of 10 to 20 years to absolutely break that high and continue on $300 or $400 a share, which makes this a really good buy at about $100. So 3M, and it pays a dividend, not a huge dividend, but it does pay a dividend. So holding it, you get that appreciation as well. To me, it's just a good discount. It's not stock. It's going to blow up and make you rich, but it is one that is good to have, I think, in the investment portfolio, and is right now, I believe, pretty much bargain prices. So that's just my opinion. You know, I'm not telling you what to do with your money. I'm telling you what I'm doing with my money. I'm not a financial advisor, therefore this cannot be financial advice. Go talk to an actual financial advisor. Just my legal speak for now. All right. Also, on my other bargain bin, blue chips. That's a mouthful. I want to put another one in here. This is Intel, by the way. Intel, and now we have had a nice rise. I had been accumulating Intel under $33, especially under $30. I have a pretty heavy position in it now. So I haven't been buying above these lines yet. We come back down into this range. I'll want to accumulate more. Oh, paintbrush. Here we go. Yeah, we come back down in this range, and I'll probably want to pick up more if we float back in. I think I would continue to buy, as much as it hurts me to say it, all the way down to $17. If things look really bad, I think 17 hits our floor. And yeah, so I'd want it to pull back at this point before getting more in. I think we'll get it. If we do, I can see Intel again in the next 10 to 20 years finally breaking new highs like it did back in, this was kind of your first tech mania. This is 2000 absolute mania run. This is what NVIDIA is doing now, right? And this is the aftermath. So be wary of these bubble stocks. This was definitely an Intel bubble. Then reality sinks in. So this is much more gradual, much more natural progression. We did exceed a little too high, but look, if you take it like an average, or take it like a curve, right? So what's our average? Our average is this way. And if that's kind of the average growth curve, it even goes back down in here. You can see it. If that's our average growth curve for the stock, you can see when it's undervalued and overvalued. And right now, you can tell, I think we're at undervalued. I think that, we come in and just kind of rotate around a bit as we pull back up in the next 10 to 20 years, probably hitting that $60, $70, $80 mark, maybe higher. Again, Intel's another one of those dividend stocks. So if you have a tax deferred account, the dividends would not be subject to tax. So it's another one of those good long-term holdings, in my opinion, for my account. If you guys think that for your account, it's on you. But for me, that's what I plan to do with this one. Well, let's look for any divergence on the monthly. We don't have a monthly divergence, but you can see RSI coming up from oversold. We haven't even hit the midline yet. I think we'll at least hit that. And then you can see the monthly MACD is definitely finally curled up, and we have a bullish cross on the signal. Histogram is above 50. So we have some momentum up. See if we can keep it, or if it just wants to roll, continue. All right. Next bargain blue chip for me is Target. Target has definitely been in a rough spot lately. Earnings came in not great. They've lost a lot of revenue due to shrinkage and theft. Now, that's something I think they can iron out. Other retail giants like Walmart are moving up into new highs, where Target is hitting lows it hasn't seen since 2020. So, we had our 2020 COVID scare. Even during the COVID scare, it came down to $89. It's currently at $123, off of a high of around $269. Now, this was a big run up. So for it to break back down and test some lows, that's not unheard of. And you can see we've completed kind of a 5-wave move. So, oops, there we go. Pull the fibs. Why it's doing this to me again, where it doesn't show up. Anyway, I'm getting a little buggy at the moment, so we'll stop playing with the indicators. Just look at what we've got on here. We do have, it's hard to see, but you can see it. That's definitely lower than this one. That is definitely higher than this one. So we do have some longer term weekly bullish divergence on the RSI. And definitely on the MACD on both the histogram, because this counts. Let me see if it'll let me mark this one. Nope. Anyway, this counts. Oh, here we go. There it goes. This counts and this counts. All right. So that's divergence on the MACD and divergence on the RSI on the weekly time frame. All right. I only need one of these. I drew two. All right. So we did break the 786, but it wasn't sustained. It was a wick. I don't really count the wicks too much. Let's get our 1, 2, 3, 4, 5 going. 1, 2, 3. That makes 4. Sorry, 3. This makes 4, and this makes 5. Now, let's double check our extension. And we haven't hit the 618 yet. So it could be that 3 is here. It looks like a 4. Right shape for a 4. 3 is there. 4 is there. And then 5 brings us all the way back down to $89 and $90. That would be, that'd be rough. However, we aren't there yet. And this could just be an ABC instead. Let me pull it into a daily time frame. Let's see if we have. We don't really have much here for an ABC. Just misses. Yeah, and this could definitely go lower. However, I still think it's a good area to begin your accumulation in. Look, you're not going to buy it all today. What we're doing is we're buying bits and pieces. You know, set it weekly, set it monthly, however you want to do it, and you're buying into these. These are the blue chip, which I know Target isn't technically blue chip. 3M is much closer, but according, big names in market share that you would be surprised if they went under the next 10 to 20 years, because you want to be in them for the next 10 to 20 years, or I want to be in them for the next 10 to 20 years. You get to make up your minds on it. And yeah, Target's one of those 10 to 20 year stocks. Now, I know there's been some, what do they call it, controversy with their diversity sales, and people are doing the whole anti-woke thing. Like, whether you agree with that or not, it probably wasn't even Target's decision to do it. I know that sounds ridiculous, but I'm sure you guys have heard of BlackRock by now. But when you look at companies like BlackRock and Vanguard, these large investors are the ones who really push for these programs. And trust me, they've got their fingers all up in Target and all these other companies. And they want these programs to go through because it distracts from the things that they're doing that don't look so good. These are their community, like Save the Environment, or support your local moms and dads, or let's cheer on for diversity. These big companies don't care about that. All they care about is making their image look better and keeping the heat off of them for doing more nefarious things behind the scenes, which, believe me, they absolutely don't want you paying attention to any of that. So a lot of that's cooling off. That's going to come into play. Well, I'm going to go straight to Disney on that note, because I know Disney's been having some very similar issues in that regard. And look, I'm not asking you guys to pick a side or play politics or any of that. I really couldn't care less about it. When I look at investments, I'm in it purely for money and gains. That is it, right? So Disney, same idea. Look, we got divergence, 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 divergence. Again on the weekly chart, we are down in this area, and if you can't tell, I've been really eyeballing Disney because I think that we're hitting some bargain prices. Disney is one of the largest telecommunications companies in the world. They own a lot of, a lot of IP. They own a lot of brands. They just own the whole entertainment industry, really, and it's one of those big household names that I just don't think, I don't think it's going to disappear. I can't think of anyone who would buy Disney. I can't even imagine the price they'd have to pay. It it is a large conglomerate company, and the new CEO, Bob Iver, that's the guy, right? I'd have to look him up. I think that's the guy. If I'm wrong, y'all can correct me in the chat. I'll apologize. Anyway, he's come on. They brought him in specifically to turn the company around to be more profitable. So all this mess here, that's his job to turn around. I think they're going to do it. I really do. I would not be betting against Disney at this point. And again, you can see fast drop. We get this rounding bottom out. And if we continue to come down from here, and I think that we're really close to a bottom, if we haven't hit it already, keep your eye on Disney. If it falls out of this range, I think we're going to hit 78 again. If we fall out of 78, maybe 67, maybe as low, and I drew another range down here, maybe as low as 43 and in the 40s. I do not believe for a minute that we're coming down into this range. I just don't see it. We haven't been down in here since 2012. Yeah, no, it's too big. It's too big. It's like one of those too big to fail banks. It's too big to fail company. It's not going anywhere. Accumulate, right? Just set it to accumulate. We are 85 from a stock that has a high of $200. So you could be getting this at less than half price. Moving on to our next probably controversial pick is Pfizer. Pfizer is an enormous drug company. Again, they own a ton of patents. They do a lot of research. The government funds them heavily. And Pfizer, it's not so much a huge bargain, I don't think, as it is under its average. Now, we talked about kind of the trajectory average price, and when we're moving over the average and when we're under the average. And to me, I believe we are under the average. Now, we did have a downturn here. Again, after 2000, I think we lost some IP, lost a little momentum there. However, let's put it on a monthly. Let's go back. Let's go way back. That still looks... Let's take this one out. That's your direction right there. Overpriced, underpriced, overpriced, back to underpriced. And I think that this will hold in the long term, probably for some more time to come. I don't think Pfizer is going anywhere. It's a rather healthy company. Bottom line looks good. You're just cooling off from some overzealous COVID moves. Got to reach that equilibrium in price. You can do the same with the highs up here too. And just kind of wave up. I just don't think it's done yet. So where are we looking to buy? Obviously, uh, under here. I think under 37. And I would stay. I don't want to see these. What is this? Is this the COVID low? It's not even the COVID low, is it? It is the COVID low. I don't want to stay above the COVID low at this point. Because I don't want to lose all this volume support down here. So maybe about halfway to it. Let's say $30. Pfizer can hold $30. I think it's doing well. I think it's off to the races. Lose the COVID lows, and then you're falling back down into this area about 1860. That'd be a little harder to swallow. I hate to see it lose that. Let's pull up a retrace just to be sure. All right, the 05 now. Yeah, I hate to lose that. 21. That's right at, yeah, it's right at our 30. 618 retrace right at our 30. I think that to me looks like a solid plan. So from here to $30, I'll be buying in chunks of Pfizer. And then our last one, this is my least sure one, and this is Verizon. Huge company. I think we're coming down into this range again. I just do. Look at the momentum. We haven't curled up yet. Now, if we sit above this line here at 31.86, I'd be tempted to start picking up shares in here if we start to round out. But I want to see it round out. Like if it's coming down again and it comes in hard, says bounce fails and we come in hard, I don't want to pick that up just yet. I want to wait for that reaction and then let it here. This would be more what I'd want to see it do. Is you see this range, this accumulation range, as we pick up speed and momentum. So I'm not in Verizon yet, but I want to pick up shares, I think, under 31 all the way down to about 26. I'd probably grab them around 25. If it wicks out a few down under here, I'm not going to be too worried about it. 22. We start breaking under that, then I think we've got bigger problems. So as long as we can do that, I've got my eye on this one. It's not a buy for me yet, but it could be very soon. All right. I think that's going to do it for me for today. Those are my bargain blue chips. I know they're not super exciting. I mean, look, if we come all the way back up, you're doubling, right? You're only getting that 100%, which that's really good. But these are large stocks that almost all of them pay a dividend. So you're getting that as well. Yeah, Verizon, dividend. Disney. No dividend on Disney. I think that might be the exception. Pfizer pays a dividend. I know that. Yep. Target. They pay a dividend. Intel pays a dividend. Let me show you. Hold on. I know that one. I get the dividend on that one. And 3M also pays a dividend. There it is. So you get those dividends. You get that appreciation. We're looking at 100 to 200% gains as a possibility in the next decade or so. Yeah, I'll be buying in on these. What do we got here? These six big giants here, big giants of value, and I'll go over some riskier, more lucrative, possibly more lucrative plays in my next video. We'll go over some bargain bins that aren't quite blue chip worthy, in my opinion, but that are just really hot deals at the moment. So we'll see you on the next video for that. Until then, have a great day.